Hello and welcome to Markets at Noon. Let's go across now to a very special guest. Prakash Agarwal from Axis Capital is now joining us. Prakash, let's start with what you have written for as far as the pharma company goes for Outlook 2022. Just to remind our viewers, in April, once the pharma stocks had started to rally, Prakash, I think, was the first analyst on the street to write a big report about tailwinds in the pharma sector. So, Prakash, after the rally, after what a lot of management had said after that report, what do you believe is in store for the next coming year?
No, so clearly, pharma companies have done extremely well in terms of, performing and executing during the pandemic, both from top line front as well as managing costs. What we see now is companies with very strong pipeline or brands can continue to outperform, whereas the cost will start increasing given that, the raw material cost or the pricing pressure, all those tailwinds are kind of moderating or normalizing now. And valuations also have, if you see the pharma index is up about 66% in the last 1 year. So valuations also have run up. So we have to be selective in terms of looking at which stocks currently are at a comforting valuation, and we also fundamentally give a support from their pipeline or the brands that they operate in India.
Right. So we spoke to Dr. Reddy's this morning, and we spoke to Dr. Reddy's this morning, and Mr. G.V. Prasad was quite sure that the sort of strategic importance that every government, every person in the world has realized about this pharma company will only increase from here on. Margins have a structural benefit and a one-off component. Are you factoring in an important cost saving coming in because of digital?
Yeah, so the cost savings, a part of the cost savings will continue, given the fact that even post-COVID world, traveling promotions, everything, at least 10, 20, 30% digitalization has happened. And it is likely to continue even after, all these things come back to normal. Having said that, as I just mentioned that, some of the raw material costs have started to increase, A. B, also, if you see during this quarter, probably, you'll see that export incentives are not there for at least 1 quarter, and the visibility of the export incentives would also, it's not clear from this quarter onwards. The government is supposed to come back. So having said that, we would see that while the cost savings of digital platform will continue, there could be minor hiccups in terms of margins.
Right. In terms of your top picks, I know you always classify in the large cap space and in the mid cap space. So could you just take us to your maybe top 2 large cap and top 2 conviction mid cap pharma names?
Yeah. So as you just mentioned that, companies with comforting valuations and good businesses, strong brands and pipeline. So on the large cap diversified names, we like Dr. Reddy's and Cadila. And from a mid cap to cram space, we like Divi's, and the third in the domestic space, we like Eris Life.
You would have gone to a lot of your clients talking about DVs, talking about Dr. Reddy's, and some of these names. Is the main question after the run up what will lead to further re-rating, and how would you justify that?
I think given the gush of liquidity, it's not about re-rating of the stock. I think our understanding is that which companies will continue to outperform fundamentally and will have minimum hiccups in performance. I think given the gush of liquidity, those stocks will continue to outperform versus stocks which are relatively dependent on thin pipeline or have either USFD issues or where the earnings volatility is pretty high. So I think investors clearly want to stick to companies which have certain and strong earnings visibility.
Mr. Agarwal, thank you so much for joining us today on ET Now and sharing your views on the entire pharma space, which are the stocks, which are the pockets really of opportunity in the sector.